Right. So, I mean, Samara was founded in 2018. I believe it was January 2018 by German entrepreneur and billionaire Christian Angermeyer and Mike Novogratz, who I assume I don't have to tell anyone on your channel who that guy is. So the idea at the time was basically to create a European merchant bank for all things crypto, very similar to like what Galaxy basically already is stateside, but doing it in Malta because you probably remember back then Malta was really at the forefront of trying to push crypto banking legislation that would make it very favorable from a European banking environment. And basically they did that until the Chinese exchanges played their Chinese exchange games, and the ECB started to look at Malta and said, "What the fuck are you idiots doing?" And they basically killed the whole thing. So, anyways, what ended up happening is, I mean, Cryptology Asset Group, it brought money in, and it never really built out the operation that it necessarily intended to from a merchant banking perspective. It really just became a holding company of a couple of different companies that it had invested in. Now, mind you, I wasn't a part of the organization at that time. Cryptology invested in Block One, pre-EOS ICO, so regardless of how you view EOS as a shitcoin or not. I mean, if you were a shareholder of Block One, you were pretty goddamn happy with how everything turned out there. Let's be completely honest. I mean, at one point they ended up having more Bitcoin than God. So if you were a shareholder of Block One, you were pretty happy.
Amen, sister.
Exactly right. It also invested in Northern Data, which, while Northern Data as a Bitcoin mining group has had a roller coaster over the last couple of years, it was actually at one point in time the largest private miner of Ethereum until the merge, and it's still one of the largest organized Bitcoin mining groups on Earth today. So we're still very happy in that investment, and we're continuing to invest in Northern Data as it moves forward. On top of that, it invested in my company, Iconic, now Deutsche Digital Assets, as that asset manager, and a handful of others. And that's when, so in 2020, what was, let's call it, beginning as a $25-30 million balance sheet, which was Cryptology Asset Group, it goes on to be worth nearly $500 million during the heyday of 2020 Bitcoin craze, right? I mean, Bitcoin goes up to 60, 70,000 almost. The balance sheet just absolutely balloons. So the board at the time decided to take Cryptology Asset Group public in October of 2020. They realized after that they needed somebody that actually knows how capital markets work to run this. They need somebody that knows crypto asset management, and I had been running a crypto asset manager that it had already invested in for some time. So it just made perfect sense for me to step in, put on my Elon Musk hat, and run two companies as best as I could for a couple of years. Hair got really gray. That's why I got to keep it nice and short right now, so you can't see how many thousands of gray hairs there are there. But nonetheless, we were able to be successful with just about everything there. Now, where Cryptology is today, actually I should say Samara Asset Group is today, relative to where Cryptology was before, I mean, I believe post 3AC, post Celsius, BlockFi, all of the exuberance, and then especially post the bullshit that was FTX. I mean, crypto, the way that it was structured, not from a technology standpoint, not from a vision standpoint of what we want Bitcoin and crypto to be, but from a pure infrastructure standpoint, it had been proven dead. Everything that we trusted and everything that we believed in from an infrastructural standpoint that enabled crypto to work outside of just the tech stack, it had failed entirely. But the one thing that did remain was Bitcoin. Whereas a lot of people started to see the bullshit that was being built on top of Ethereum and DeFi, and a lot of the bullshit layer ones like Solana that isn't even a goddamn blockchain. All of this nonsense that's out there. Not to say that Ethereum and Solana are nonsense, but obviously what ends up getting built on top of it largely has been. Bitcoin remained as the lone gold standard, if you will. So I convinced our board that it would be a better idea to rebrand the company away from Cryptology because we don't want to be a crypto company anymore. We never really bought or sold or traded in crypto anyway. We invested in companies that were building in the Bitcoin, in the blockchain, in the crypto space regardless. And on top of that, I had the idea that we should be building a new asset manager underneath an already well-established liquid balance sheet, which was Cryptology Asset Group. So this is where it was rather fortuitous. I mean, we were able to bring in a team bring in a fund complex underneath what was rebranded to Samara Asset Group, and we now call that Samara Alpha. So this is our US-based subsidiary asset management complex. And now, part of the pivot of the strategy of Cryptology Asset Group into Samara Asset Group is we want to focus on making fund investments. And while we still do ad hoc direct investments into companies as they approach us, and really we only do that if it comes from directly within our network. Like, for instance, Christian is very close with Peter Thiel. He's very close with Alan Howard and a couple of other larger, more noteworthy investors. If they have an interesting deal that they're looking to close out and, hey, we can get 500K or $1 million into it, we'll jump at the bit to do it. And that's how actually Cryptology ended up becoming a shareholder of NYDIG, NYDIG in the US, because NYDIG ended up acquiring a company, BottlePay, that we were invited to co-invest in alongside Alan Howard. So we'll do that every once in a while.
Hang on a minute. Are you guys the reasoning we can't buy via Lightning anymore in the UK because BottlePay closed down?
Yeah, I think so. So it's not my fault. We invested.
I know.
I mean,
Thank you, Peter Thiel.
No, that was Alan Howard. No, so NYDIG bought BottlePay and basically tried to integrate. I mean, I love BottlePay. BottlePay is one of the best startups I ever saw at the time. And NYDIG just built it in and made it more institutional, rather where BottlePay was a retail-focused platform, right? So is what it is. But anyways, now our strategy is we're focusing on making fund investments. And we actually started this about 2 years ago. We said we were going to be allocating 100 million of our balance sheet into maybe 15 to 20 funds, both liquid managed funds as well as venture funds. Now, we've invested in, I think, 7 or 8 funds to date thus far. I think we've allocated something like 25, 30 million over the last couple of years. Not the 100 million that we were intending, but we noticed that there was a huge problem. Asset managers in crypto bloody fucking suck. Most of them do. That's just the truth of it. I mean, why do we think most of them ended up going belly up whenever 3AC went under? Why did most of them go under when BlockFi and Celsius went under? Everybody was doing the Ponzi grayscale trade. Everybody was getting the immediately harvest returns on GBDT. Everybody was turning around and lending that to each other, and they were all in each other's pockets, generating yield, bringing in more assets that they could use as collateral with one another, and then turning around and losing it all, because whenever one of them ends up going belly up, sets off margin call, and guess what? It was a zero-sum game. There were no actual assets with any of these groups. It was all just theoretical, notional value, collateralized derivatives on loans that were basically intertwined with each other. So the whole thing falls down. So we actually avoided making most investments in asset managers because we saw through this. I mean, we had an opportunity to invest in 3AC. We had an opportunity to invest even in BlockFi itself. We were invited into a SPAC in BlockFi, and we avoided all of this because if you knew at that time how the back rooms, like we discussed earlier, in crypto worked, it was all just hyper leveraged. Every single thing. Well, so when we realized, so then fast forward, the whole crypto world blows up. 90% of the funds go under. I mean, the only ones that really stuck around are the index fund and the ETP groups. So like in Europe, CoinShares is there, MyDDA is there, 21 Shares is there. They're all alive and kicking because those are passive products. But the only active managers that really are still around are Pantera. I mean, even Sequoia has, and that's a massive VC fund. Sequoia is not really doing much anymore in crypto because they've been reeling from FTX. Andreessen had their $4 billion crypto turnaround fund. They're not doing a goddamn thing. You end up with, God, who else is still there? Galaxy still manages a fund. So Novo and his guys are doing well. And then you end up with Brevin Howard, right? Outside of that, who are the major crypto funds that are still around anymore? I mean, you have, Multicoin, you have...
I was just about to say Multicoin Capital.
Yeah, but there's allegations out against them too. I'm not sure they're going to be around much longer. I mean, everybody that was like the OG crypto fund, they're dead. Or they're dying. So we saw a clear need in the market. We saw an opportunity that us being a balance sheet, I mean, I think our market cap's roughly around like 100, 120 million right now. And that's after paying out a dividend of 75 million earlier this year from Block 1 proceeds when we sold out. So we were earlier this year a 250 million market cap company. So we have that balance sheet, and our team has knowledge and know-how how to eliminate operational and counterparty risk in asset management. And this is the key ingredients that were missing and what inevitably led to the complete implosion of crypto asset management post FTX, post Celsius, post 3AC.